Now, I mean, I got to talk about this GameStop. Um, I had to tell you. Oh, so just a little background. If you're not watching what's going on with GameStop, their GameStop used to be, or still is, this meme trade that a bunch of people on Wall Street bets got into by a guy at the time called Deep F in Value. Now goes by the name of Roaring Kitty. And essentially, there was this big movement during the whole COVID crisis where the stock was pushed up. There was the GameStop was being shorted. GameStop and AMC were being shorted by a bunch of hedge funds and institutions, and so little old retail guys figured out that if they were to pull a bunch of shares off the out of the float, that it could cause the stock to go up in price, and it would cause the institutions and hedge funds to have to buy back the stock and drive up the price, which would then obviously make them a lot of money, like the retail traders a lot of money, and make options a lot more valuable. Well, we're going through that again. I can't believe we're going through it again in 2024 on the same GameStop stock, where the I guess the Braveheart, the Spartacus of GameStop last time has come back in. Surprise, surprise! He has millions of dollars worth of shares and millions of dollars worth of options, and is driving the price up yet again. And I don't know if you've been following this, Mike, but people have been talking about when it started, when he published, he tweeted out and he published his positions. People were swearing up and down, it's gonna crash. He's gonna lose all his money. It was ridiculous. How could he have the audacity to do this again? All this stuff was floating around, um, and those people so far have been wrong. The meme craze is back. The retail investors are know their game plan. They don't need to be convinced in order to try to do this again, and they're little by little causing the stock to go up. Let me share the chart here. What are we at right now?
It's come down a little bit this morning, 34.68.
Well, that's because of the non-farm payroll. I think came out and it was like unemployment rate went up to 4%, and
Well, it was also earnings. Earnings were disappointing on GameStop today.
earnings don't matter, Mike. Come on,
There's got to be
I thought
some
we were past
rationality in
that.
markets, right?
So we take a look at this on the log chart. Yeah, they're at $34. So
Mhm.
yeah, I remember at 25, people were calling for this to fall back to another 10. What was interesting to me, and this is what bothers me about some of these things, I have my own signals, and my signal was saying that around $12 was the floor in GameStop, and that I should start buying calls around this level. But I just couldn't bring myself to do it. I was like, even though my signal was saying, yeah, I should do that, I just couldn't bring myself to do it. And I regret it because this would have been a lot of fun to participate in. Um, this doesn't appeal to you, like to jump into something like this, be like, hey, let's buy high and sell higher?
It's not predictable. I think that's my dilemma. Keith is able to do this because he's got a massive following, and all he has to do is put a meme up of a guy sitting forward in a chair, and his call options are suddenly worth hundreds of millions of dollars more than where he started. I don't have that advantage. I don't have 1 million people plus following me on Twitter. So no, I can't. I can't jump into this kind of stuff. I think the volatility is just way too high for my taste. Perhaps there are some options opportunities here, but the premiums are so ridiculous that I don't know if I want to play that game either. But I like I said earlier on our office hours. I would probably be interested in taking the other side of this, waiting for enough of that fervor to start to hit a frothy point, and I'd be interested in shorting. Today would have been a great day to open up a put on something like this.
Oh, okay. So what you're saying is that you want to go against the millions of people, the lowly retail traders,
For
and
sure.
go against them? That's what you want to do? Come
Yeah.
on.
Yeah. Especially knowing that earnings were coming out today, it was nearly impossible for GameStop to show that they were going to have positive earnings.
I mean,
If
how
it
could they? How could
if
they?
it was a beat on earnings, I would have been very, very surprised. Their last several earnings reports, I think, in 2023, were like, promising. There was some interest there, but more often than not, GameStop struggles to show positive earnings.
Well, in the world of liquidity and momentum and inertia, it's been a study. I don't know if you've had to do this, but it's been a study of rolling back what I think values a value of a stock is, because like when you see the difference in breadth between the indexes and the underlying stocks or the underlying sector that's not within the indexes, and it's just this massive divergence. I think like Nvidia is 40% of the S&P now. Like its movement accounts for 40% of the S&P, while a bunch of other stocks are not going anywhere. I sort of like how can you do a you know how can you discount the cash flow of Nvidia and like figure out what the actual price of the stock should be now compared to what's going on when you have the passive investment flows going in, when you have the apes just memeing it, or the what do you call them, the degens aping into all kinds of different stocks, and you have
Mhm.
people who are just like, well, like people like my family members would be like, well, Nvidia went up today, so I should buy it. How can you fight against that tide? I go, forget what their books, forget price to earnings ratios, forget all of that, and just buy the thing that's going to go up because it's going to keep going up. That's
Yeah. Yeah, it's a tough one. I mean, even when this first happened, I think there were lots of us out there were like, maybe GameStop's an interesting one to get into. If there's enough retail excitement around it, then there's a momentum play there. I think the trouble is like anything, I'd rather trade the volatility of it than trade the actual underlying, because it's just so difficult to know how the market's going to respond. You would think that even with bad earnings today, to your point earlier, that the GameStop retail excitement would be unstoppable and we would still rally against the bad earnings report. But that's not what's happening. There's suddenly rationality showing up in the market and prices pushing down towards something closer, to a fair value of wherever GameStop should be. Which, by the way, where should GameStop be? Where are we even at here from a fundamentals perspective? Um, Earnings are
on the
forecasted to grow
yeah.
about 90%. They're barely break even, so that's good to see. At least there's some actual profitability here. Um, Returns on equity are impossible to estimate. So, what do we have here for fair value estimates, or the street's estimate of its valuation? Not
Um,
available. We can't even estimate future cash flows at the moment. It's too difficult to do. So,
Look, the price went up to the yellow squiggly line and stopped there, as it should. The volume weighted moving average for the weekly period, and if it shouldn't fall much further than 21, so that's where you buy. And if it goes above there, well, then it's headed to 123. How can you not want to be part of that trade? I mean, it's especially when I know I'm definitely going to lose money anyway.
yeah,
So I
sure.
might as well lose money knowing ahead of time that's going to happen. And if it doesn't, I have 100,000 other people on my side just storming the gates. Like that's the part where I go, like, when it comes to rationality, here's the way I think about it. If it comes to, I want to make a rational decision about something that makes a lot of sense, then I'm going to go into crypto, the safe asset. And if I want something crazy, GameStop is the way to go. Everyone else looking for the next ones, right? I don't know if you're participating in Wall Street Bets and all or the Reddit clans. They're looking for the next things. They're like, okay, if this is keep on going, then AMC, then what is it? The other I saw FFIE. I don't even know what that stock is. People are like, okay, let's find the other ones. Let's go after all these hedge funds
Faraday
that are trying to
Future.
short things and just squeeze them all out.
Right.
Um, why not? Why not give it a shot? Look, I'm not trying
It's
to convince you.
it's a tough one. Yeah, I think that that's the beauty of markets, though, right? We all get to put on the trades that are most interesting to us. What I find interesting about the Roaring Kitty thing is this post from Jonah Lupton, who's sort of a swing trader, if that's the right way to describe him. But he's usually looking for growth opportunities. He does a lot of fundamental analysis on growth companies, but he's fairly well followed. Jonah puts this post up saying he's trying to figure out exactly how Roaring Kitty even ended up with $180 million worth of GME. And that is a very good question, because if we recall back to 2020, at one point he started with $50,000 in call options and effectively built his portfolio about value up to about 30 or 40 million dollars, somewhere in that range.
Right.
How did he jump from 30 to 180 million dollars? Something had to have happened in between there for him to make those leaps. And given his historical run and the way he trades, uh, Jonah's theory here is that at some point in April or May, he sold most of his equity, then loaded up on calls. He came back to social media and pumped the stock, which went up 330% in 3 days, and then down 75% in the next 3 days. He probably sold all of his calls near the top and then started buying back the equity, which is why his cost basis is in the 20s, which is another really good observation, because the original cost basis in 2020 for Roaring Kitty was well below $20. Then he decided to play the game again. So over the past couple of weeks, he sold his GME equity, loading up on the June 21st $20 calls. And then with GME up 83% in pre-market, he's up over $95 million on the equity, and he's probably up 450 million on the calls. So that's when we all started seeing that he likely could hit a point where he's worth $1 billion in a very short period of time, just because of the value of those GME calls. The price didn't hit 65 though. Now it's actually starting to retrace. We're down 30% today since the open. So the value of these is questionable. We're what, 53 minutes away from his live stream today. I'm very curious to see what Roaring Kitty is going to show and how we can evaluate how he's actually taking these trades, because my assumption is that he's selling into this retail liquidity, right? That's the only way you can move positions this large.
That's right.
His positions are massive, and it requires this kind of liquidity to get out at a really good price. So I don't know. I'm a little skeptical about all of this. I think he's already done it once. What you really have to question is how he got from 30 million to 180 million in the first place. And I think he's playing a game of selling the top and buying the bottom.
In the world of Susan Jacoby, who wrote the book Age of American Unreason, talks about this sort of like move towards, you can see the language that seeps into culture as indicative of, it changes the way that people think. So for example, we use hype and spin as like good terms now, right? When they used to be absolutely like, those are snake oil salesmen. That's what you avoid. You don't want any hype or spin or any of these talking points. The idea that he's selling into the very crowd that he's riling up in order to get out. Those self-same people are happy about it. Like, they know that they're exit liquidity. And it's fascinating to me to see. I mean, I've seen tons of posts where people go, I'm in this not because I'm going to make any money, but that there's a possibility that it might be a punch to institutions. That
Yeah, but what's fascinating to me is we're literally creating an institution in this process. If Keith Gill becomes a billionaire for this, isn't he now elevated to the status that we're all rallying against?
but he's one of us.
Right. When do you leave the domain of being us and enter the realm of being an institutional
His
billionaire?
children. His
His
children.
children. Okay, that's
He's
who we're
allowed.
rallying
He's
against.
first generation billionaire. You get to keep it. It's fine. He's like Elon Musk. It's fine. You get to do that.
Got it.
Well, to me, it's just fascinating, and it's great. If people don't want to follow liquidity indicators, which we'll take a look in a second here about the or sentiment indicators or anything like that, just paying attention to GameStop and getting those alerts of what's going on gives you a nice little sense of, we're not in recessionary territory right now, or rather, not in a contractionary period of liquidity. I'll put that. It might be in recession. I don't know about that.
Yeah.
And that
I think speculation is back, though. Like
absolutely.
1930s level speculation. Bring it
Yeah.
on. There's plenty of liquidity in markets now.